Hi, guys. Thanks for tuning into another episode of Nuggets News, or our monthly housing and economy update with our friend Martin. How are you, Martin?
Yeah, I'm pretty good. Been an interesting month, what with Trump arriving. So everybody, of course, is now in Trump mode and the implications of that. In Australia, we've had some shenanigans in the parliament with regarding specifically to social media, and we'll touch on that. And
Yes.
some of the economic questions are now really getting very sharp. Both, for example, the latest inflation, which came out overnight, which was higher than expected, particularly in the core. So that's not going to help interest rate cuts. And more broadly, of course, the question of what's really going on in the housing. So, there's so much to talk about, Alex. But of course, we should celebrate Bitcoin, which continues to move towards the 100K US.
Yeah. Well, Martin, I have had a bit of a long day, to be honest. But whenever I see some memes and some Bitcoin slides come through from you, it gets me gets me up and about again. So let's dive into all these slides you got for us. So you've been talking, as we have, about the misinformation bill, and it did die, which was good news.
Yeah, finally. I mean, this should never have got as far as it did, but it was interesting that ultimately Labour pulled it. They had nearly 30,000 submissions from the public. They haven't even processed most of those. And so this is good news, of course, because the misdis was, massive control on who, as we discussed last time, who sets the truth. However, we should say it's not all over because there's another bill which is currently just passed through the lower house relating specifically to the online safety amendment. This is you've got to be over 16 years of age to access certain types of social media. This passed the lower house, but again, I have major questions. Even things like the human rights people in Australia say this shouldn't be passed. Of course, Elon wasn't very happy about it either, but it's bipartite at the moment. So both major parliaments parties are still supporting this, despite the fact that nobody knows how it's going to work. And the trouble is, if it's linked to digital ID, then potentially what it does is a backdoor way of controlling a lot of stuff. So this is a bad bill. They had 15,000 submissions in the 24 hours that they left open for submissions. 15,000. That's an
Yes.
amazing record. And if I go to the next slide, my observation is it doesn't matter which side of politics you actually think is right. They're both clowns on this. This is
Yep.
ridiculous. We needed to really have a serious think about how our political party in Australia is working as one. And this social media stuff is driven by News Corp and Murdoch. They've been pushing on this for months and months and months. So the real agenda here is one, digital control, and two, mainstream media trying to fight back. And this is maybe their last hurrah. But just be clear, this is effectively both sides of politics following Murdoch and not thinking for themselves. It's a very bad look.
Yeah, and in my evil elites videos I've been doing, I've been trying to get people to understand it's really important to know who owns the media and who owns the banks and the connections, follow the money and the politicians around the globe, not just in Australia. And we've been talking about for years that this is all part of the plan to take away our freedoms and roll out a central bank digital currency and digital ID. And they've done that under the guise of protecting children, but we now know it's going to be mandatory for all adults to use. And there was some news a couple of hours ago. I just saw that it did something else. Did it progress through? I didn't have time to read it all. Like I said, I've had a busy
Yeah, it
day,
went
but
through the lower house.
it went through the lower
It's
house.
gone.
So, yeah,
Yeah. So it's still got to go through the Senate,
yeah,
but I'm afraid that the Senate is likely to probably pass it because both major parties are supporting it. But there are some really, really powerful Senate independent senators who've made exactly the points you're making about this. Join the dots between central bank digital currency, digital ID, etc., etc. And it will be interesting to see precisely who votes for this in the upper house. Look, there are clearly issues in terms of social media content. Absolutely agree that there should be better controls. But to rush this through without thinking through the consequences, even a lot of the people who are advocates for helping youngsters to better deal with the internet in their hearings, in the one day of hearings on Monday, they said this bill isn't going to work. This is not going to solve the problem. So
yeah.
you've got to say, what is the real agenda here? And, I think there's something going on here which we should be quite concerned about. And at the end of the day, what's going to happen? People are going to get around this. If they're youngsters, they're going to be very, very able to go through VPNs or create overseas accounts. So that's not really going to work. And yet, if in fact digital ID is the way of actually controlling access, that means everybody needs to prove their age. And there's been a lot of issues about, well, how's that information going to be stored and kept, and is it going to be kept, and who? Well, once it's out there, it's concerning. So my view is this is absolutely a clown show, and it shouldn't be allowed to pass. And this is for me a classic example of politicians looking after not the interests of Australians.
Yeah, and make sure you follow myself and Martin on Twitter, guys, and so you can see when these petitions come out and that type of thing. And we're getting those good numbers. But
Yeah, and I should just say, Alex, that kudos for a lot of people who follow you and me, that they actually put a lot of work in putting a lot of submissions in. It really does help. So whilst people may think this is a bit of a waste of time, no, it's not. Every submission that goes in is a count. And we had wins on the cash ban. We've had wins on the regional banking inquiry. We've had wins on the mis and disinformation. We just got to keep pushing because we've got to keep them honest.
yeah, and we had a win. I spoke at the West Tamar Council COVID inquiry the other day, along with several doctors, surgeons, specialists, and so on. And we had a win there, and there's been several local councils since. So it looks like at the grassroots level, we're beginning that push for that inquiry as well, which is really great.
Yeah, great.
Cool. All right, moving on. So living standards.
Yeah, so let's just talk about some economics now, which of course is what this show is really about. So, it's interesting now that finally people are realizing just how bad the living standards have become in Australia. As this particular article says, living standards have come to a shuddering halt. Households hit harder than in past recessions. This is, very important. I've been talking about this for a long time, of course, on this show. And finally, it's now being reported in the mainstream. There are a lot of people doing it really tough, going backwards in real terms. This is the worst it's been for a long, long time. And comparing it with the US, for example, our living standards have dropped through the floor. This is bad politics. This is bad policy. This is 20 to 30 years of stupidity that's now coming home to roost. And unfortunately, a lot of ordinary people are now being caught in the crossfire.
Yeah, I might have a bit of a rant when we get through some more Australian slides, Martin, but I'll let you keep going for now with disposable income.
Yeah, and just before we do that, I will just say again, the monthly inflation data, which came out overnight, the core was at 3.5%. The top line number was the same as last month. So there's no positive news, and there's probably some negative news. Remember, the RBA is looking at the numbers X the handouts for electricity. Rents were very high again, and that takes us directly to the next slide, which is the disposable income slide. So in real terms, just to be clear, we're going backwards in real disposable income per capita. And the other little cartoon here I thought was pretty amazing. Immigration going up, rents and house prices going up. Could there possibly be a connection?
Yes. Yeah. I love your memes, Martin, and people are starting to join those dots, which is great. Okay, so rental affordability index.
Yeah, so this was a very important report that came out. This is looking at rental affordability across the country. They actually had to introduce a new category called critically unaffordable rents, where you've got 75% or more of income spent on the rent, critically unaffordable. It's horrendous. And they've produced some maps, so you can see here that, for example, I've just used the Greater Sydney one. There are areas of Sydney, in fact, a lot of Sydney, that's critically unaffordable for people on ordinary incomes. This is actually on Job Seeker, but they did it for different types of people. This is a really important report. Again, it got lost in the heat of the discussions in Parliament, but there should have been a much, much bigger reaction to this. On the next slide, I actually made a show called Homelessness, Renters Punished. And interestingly, Perth is worse than Sydney for housing unaffordability, right? Particularly in the rental sector. So it's a national problem. And I'm afraid that anybody who thinks that this rental situation is getting fixed anytime soon should be, disabused of that. They are not dealing with the student numbers, so they didn't allow the discussion of reducing student numbers in. This was a discussion in Parliament to go through. So guess what? We've still got 500,000 plus people coming into the country. We're not building enough. Renters are going up, and like I said, the inflation number had an increase in rental costs. So this is a really, really bad story.
Next up here, you've got some of the state data.
Yeah, so the two things here. Firstly, the distressed housing sales are rising according to the RBA. So this is people who are owning their properties. which is a very important piece of research. This is the RBA, and now basically saying it. Borrowers who are experiencing persistent difficulties servicing their mortgages and with no further options to adjust their finances may decide to sell their homes. One of the reasons why listings are rising. On the next slide, this was a piece of work that showed that essential workers, and it's interesting how they've now defined essential workers as a new category. They can't afford to live in Sydney, and join the dots. There's a reason for this. It's high rents, it's high migration, bad policy. So all of those things are happening. And then, of course, Louis Christopher came out with his very important report. Annually comes out with his report causing Housing Boom and Bust Report. And he's suggesting that over the next year or two, Melbourne and Sydney prices could fall by 5%, and some other states more significant falls. But of course, Perth, Brisbane, and Adelaide, he's thinking will still be a positive because of the demand there against supply. This is a really important signal. My own scenario suggests there could well be falls ahead. And if you sort of join the dots to that and just make one other point, if you look at property investors, which is the next slide, it's interesting that now some property investors in some states like Melbourne and indeed Sydney are selling and listing their properties. But in other states like Perth and Adelaide, people are buying investment properties. So we've got this really peculiar roundabout at the moment of investors piling in. The amount of lending for credit for investors is rising, whereas a lot of other investors are actually quitting. Melbourne is the center of gravity. Prices are continuing to fall there. And interestingly, a lot of the listings are ex-investment properties. So it's a mess.
Okay, so Greens vote for Labor's help to buy and build to rent bills, ending long stalemate.
So this is interesting. Of course, the Greens have been pushing on rental controls and on negative gearing and all those other things they were trying to get in. It's not worked. They capitulated. So the Help to Buy scheme, which will allow 40,000 people over 4 years to have a joint ownership with the government, and also the build to rent, I should say, which is basically giving capital breaks and tax breaks to corporates who are going to build properties specifically for rent. Now, all the experience overseas is, firstly, Help to Buy doesn't work. The UK tried it. A lot of people got stuck in property that's not great. Puts prices up, not down, so that's not going to work. And the build to rent, they tend to build and rent properties which are more expensive, so it's not actually solving the affordability issues in rental. It's going to put rents up, and it's going to give corporates effectively another leg up relative to ordinary Australians. So both these bills are a sham, and my view is that this is once again showing that anything to do with cramping down on property doesn't work. Both sides of politics, and now the Greens are saying no, we'll just keep on doing the same old, higher migration, and we're going to just pump property prices up more with the Help to Buy, and the build to rent will help corporates. This is not fit for purpose. Shame on everybody.
Yeah, and I was reading some more on Twitter just before as well about the 2% down that Albo's pushing now. So we know the solution's always trying to get more people in, but mathematically that doesn't work with the basics of supply and demand.
Correct. Supply, demand. And of course, the issue is that if prices do slide, then effectively you're going to be in negative equity with 2%. You have nowhere to go. And again, in the UK, that's what happened.
Okay. So rates buffer held amid loan stress.
Yeah, so one of the other things that's been going on is the banks have been arguing for APRA to reduce the 3% buffer. This is to do with lending, mortgage lending. APRA's come out and said, no, we want to keep it up. The reason they want to keep it up, they're worried about what's going on. The default rates are rising. The debt to income ratio, as we discussed earlier, is very high. A lot of people are in huge amounts of debt. So there's a big push. There's a report coming out, but house prices are falling on a monthly basis, offering a strong signal that 2025 will open weaker for residential markets, as James Kirby wrote. And APRA is saying we're concerned now about the levels of defaults. And of course, with those inflation numbers that came out, the next slide, we should be preparing for a higher rate plateau, because that basically means that we're not going to see rate cuts. Remember, CBA was saying November. Well, they now kicked it out to February. Most of the banks are now saying at least May, some further even out. Now, that was before Trump. And then when Trump came out, basically with the tariffs and with the immediate signs that he is going to follow through on that, what we've seen is international rates rise. We've seen rates in Australia rise, as we'll come on to in a few moments. That is going to put more upward pressure on interest rates in Australia. That's going to make it very, very hard for the RBA to cut. Inflation is still very strong. And so I believe that households need to prepare for those higher rates to stay with us, certainly through most of 2025. And maybe we'll see things ease down in 2026. But if you go to the next slide, you'll see there that now even people like Matt Common from the CBA has said that the truth is that Donald Trump's proposed tariffs on all imports into the United States will fuel global inflation and lead to higher interest rates for longer. And he also capitulated and said that some households were under financial pressure. So this is now getting very, very difficult for a lot of households. Everyone was holding out for rate cuts. They're not coming. Trump is going to continue to push rates higher. The US debt will go up. The tariffs will push inflation up. That's going to flow through. And that's why yesterday we had a wobble on the stock markets. But actually today they've come back, and we'll see in a second, they're actually quite strong again. So we are in, unfortunately, very difficult territory for a lot of people now.
Yeah, a new public demand to reach 28% of GDP.
Well, this is the other point. So if you look at it, what is growing? The only thing that's growing is government investment in the economy. So the only reason we've got a positive number is because governments are throwing more and more money, both state and federal. That, of course, is taxpayer money. So effectively, we're hitting a new high here. Remember, of course, that costs. And with high interest rates, that means that more and more of government money has to service the debt. And that, of course, creates, more pressures. This is not a productive economy. This is effectively going down the toilet thanks to bad government policy. And whilst you can sort of support the economy in the short term, electricity subsidies, what have you, at the end of the day, we're not tackling the structural issues that we should be tackling to lay the foundations for economic growth and productivity in the future. And that means that at the end of the day, we end up with just higher debt everywhere.
Yeah, and that's none of this is good for the Aussie dollar, obviously. And I see the term Pacific peso being thrown around a lot on Twitter now. And again, connecting this all back to, guys, if you believe in what I've been trying to explain to people about the banks, and they're literally just trying to, they don't care. They're trying to in-debt governments and individuals because they can then take ownership of those assets. And I've been talking about how Australia is such a test bed for a lot of these World Economic Forum and Agenda 2030 policies. And we've seen it through lockdowns. We now see it with the misinformation, digital ID. And now it looks like in terms of the economic and the currency and interest rates, we've done the worst job. And Australians are falling behind the most. So it's all becoming very clear, this picture. Do you agree with most of that, Martin? Or?
Oh, absolutely, yes. I've called out 30 years of bad policy in Australia. We are, being led by the nose. And I agree that some of these non-elected global entities like the World Economic Forum, they have very clear plans about, rolling out digital and, you won't own anything, but you'll be happy. All of those things. I mean, those are not just memes. They're actually real issues, real policies. Central bank digital currency, rolling out internationally connected central bank digital currency, using social scores, all of those things are in their cookbook. And unfortunately, our politicians are not smart enough to see what's going on. They're playing politics with this locally. They're chasing the voice and the miss and dis, massive amounts of focus on things that really shouldn't have been there. And we're missing the main game, which is to actually think about laying the foundation for a stronger economic basis in Australia and to other countries too. I'm afraid that both sides of politics are equally to blame here. Yes. And, people, I think, need to understand that the government hasn't got your back.
Yes. Okay. So we've had, things really been on a tear with after Trump got elected.
Yeah, so this is the ASX 200, which hit new highs on Monday, dropped a little bit yesterday because of the tariffs and then announcements, and then rose again today, close to all-time highs. Interestingly, the banks, of course, there was Christopher Joy made a point that our banks are setting unwanted records, and that's because the CBA is massively overvalued. You can't justify the CBA valuation on any fundamentals at all. And so that's another issue. The banks are doing great. They're actually continuing to grow their books. They're lending more and more. They are managing to cover up the bad debts, particularly for the household sector, through their various hardship schemes and other things. The truth, though, is that the economy is not doing well. And in fact, if you look at it another way, we are more narrowly based now than we've ever been. So, we're down in the sort of the Uganda, so, down in the
Economic
hundreds,
diversity
the
index.
economic,
Yeah.
yeah,
Yeah.
whereas Japan's number one, and the US and the UK is quite a lot higher. So, and even New Zealand's higher than Australia. So the bottom line is that our economy is getting squeezed and squeezed and squeezed more narrowly, and yet the stock market is saying, "Hey, everything's fine, guys. Nothing to see here."
Yeah, I think it's a leverage play, and the banks have just got so big that if they ever were to fail, it's like in the US, it's kind of they're going to get a bailout, and so now they're pushing 2% down. It means more speculation, more loaning, more leverage into this bubble.
Yeah, absolutely. Well, they are only interested in their own goals. Helping people, sure, but actually only when it suits their agenda, and they just want to keep lending more. And of course, I've argued for some time, Alex, that the problem with the banks have become effectively like the black hole. Everything is being sucked into this. Housing, of course, is one of our two big economic drivers, the other one being resources. Remember, of course, that resources potentially with trade exposure to China could be impacted directly or indirectly by the Trump's tariff imposed on China. Tariff, of course, was announced for China, Canada, and Mexico in a tweet from Trump just yesterday. And yet, if you look at the SBA 500, for example, you can see there that they're still, barreling higher, massively overpriced stocks. And I actually said in a post over the weekend, markets reach for the stars again, even as the ground shifts underfoot. Because the truth of the matter is that things are not as well as stock markets would actually indicate. And I would argue, Alex, that the reason Trump got back was predominantly because many households in the US are feeling really, really under pressure financially. And he was able to say, "Are you feeling better now than you did 4 years ago?" And they said no. And so it's the economy, stupid, was actually the main hook as to why he got back. And I think there's a really important point here that, ordinary people's finances are not necessarily mirroring what the stock markets are doing. The stock market is a wealth illusion.
Yeah, I'd say there's probably a few other things that I'd say are the main reasons Trump got back in as well. But I might talk to you more about that after the show, Martin, and see if you're across some of these rabbit holes I've been down lately. But moving on, so United States 2-year bonds.
Yeah, so, like I said, price of money in the US has gone up. Look at the 2-year, it went significantly higher. In the middle of October, it was 3.6. Now it's 4.2. And so, again, another post I made, forget seeking certainty. Suddenly, the Fed's urge to cut rates evaporates. So they might or might not cut in December, but now everyone's expecting rates to stay high for longer in the US. That, of course, is important because it spills around the world to all of the other central banks and what they do. This is because we expect to see more debt in the US, and we also expect, of course, these significant tariffs will be inflationary for the US.
Yeah.
And people haven't understood the consequences of that yet. So higher for longer, that means more debt. That means more interest payments being made. That's true for corporates. That's true for households. It's true for governments.
Okay, so the US dollar has been relatively strong.
Well, of course, maybe not surprisingly, because effectively after Trump came in, you see a significant hike in the dollar. And, you mentioned earlier on the Aussie is down quite significantly down from where it was. We're going to see more of that pressure on exchange rates to the dollar. The US is going to be predominantly strong for quite a lot longer. It's going to suck more investment dollars in from around the world. And nothing that we see at the moment is going to suggest that we're going to see a really weak dollar, despite the BRICS and everything else that's going on at the moment. The dollar is preeminent for at least now.
Yeah, and it's been interesting with gold and Bitcoin, how they have done relatively well in the face of the dollar strengthening, which is usually their inverse relationship.
Well, we might touch on gold because you can see there that gold, ran away. It was at 2,800 US. It's dropped back a little bit now. Now, you're right. In a way, it's weird because, of course, with higher interest rates, you would expect gold to be somewhat weaker, but it actually has been quite strong. Now, there's a reason for that. China's buying quite a lot of gold. A lot of people are very concerned about the economic variables around the world and want more security. Gold is seen as one safe haven potentially. Remember, of course, that gold is speculated, and there's a lot of options and futures traded around gold as well, and that's another reason why it's where it is. But expectation, I think, would be that gold is going to stay relatively high. And on the next slide, and of course, Bitcoin is touching towards the 100,000 US. Got a kick up when Gary Gensler to leave the SEC as chairman on the day that Trump arrives. And of course, Trump has been very positive towards Bitcoin and is talking about it. And in fact, there are even some speculation that maybe the US will start holding Bitcoin as part of its strategic reserve. Who knows? So, a lot of people are saying, wow, well, where is safe? Where is security? Maybe Bitcoin ain't so bad.
Yeah, the US have introduced that bill. Brazil introduced a bill today as well for their Bitcoin reserve. And obviously, Trump's whole administration being pro crypto, we've seen all of crypto start to benefit, which is really good. Yeah. Last thing I want to ask you about, Martin, have there been any more developments in the Australian Postal Bank for key infrastructure projects? Because someone did mention that the other day.
Yeah. Good question. It's gone really, really quiet. Remember, of course, it's quite likely that the Aussie Parliament will get dissolved and won't come back after Christmas, or maybe it will. But there are some things going on below the waterline. There are there's some lobbying going on at the moment into Parliament. But of course, they did announce that cash is going to be preserved. So access to cash will be preserved in Australia, firstly. Yeah. And secondly, Australia Post has asked the ACCC to put the price of postage up quite considerably, and the ACCC is looking at that now. So we'll see whether those two things play through. But there have been no developments in public with regards to the postal bank. I suspect this is something that's going to get lost in the next election, but we'll see. I have no other news on that at the moment.
No worries. Well, Martin, have a good Christmas. We'll see if we can squeeze in a show maybe at the end of the year or whatnot. But either way, it'll be Christmas the next time we will speak. So
well, let's try and do a year end review. I mean, this has been quite a year, but I think there are some important lessons that we could draw from what's happened. And, I think what I'd like to leave people with is don't assume that governments have your back. Don't assume that they know what they're doing. Don't assume that the agenda is the agenda that you think the agenda is. And it's important to stand back and just think through some of these things and then take decisions personally to try and protect your own interest.
Absolutely. Good place to finish. Hope you guys have enjoyed that one. Links to follow Martin's work and my work down below as always. And we'll speak next month. Cheers, Martin.
See ya.
Cheers, guys.